Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking again about Bed Bath & Beyond, about the short squeeze potential, and about what has happened in the past week and where we are right now. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I do not currently hold any position in Bed Bath & Beyond, but I am, after having looked back over things this weekend, I am highly likely to purchase a long position of some sort this week. So this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. All right, so a couple of things that I am going to talk about today are just a general update on the short interest and an update on the options and the potential, gamma ramp and gamma squeeze potential there. Talk about the social media update, social media interest, and then I'm going to spend some time telling you what I learned from reading about Reg SHO. This is a regulation from the SEC that sort of governs short selling, and it applies to Bed Bath Beyond because it's on this threshold security list, which I'm going to talk about today. All right, so overall update, right? Bed Bath and Beyond closed at 11:03 for the week. I could bring up Yahoo Finance, but I'm sure you're aware. And that was down about 15% week over week, which is obviously a major understatement of what happened, right? The stock rocketed up last week, as everybody knows, and then crashed back down on Thursday and Friday. But again, evaluating just where we are right now, not necessarily looking at the past, because this is the opportunity that we have. The decision that we have to make right now is, what do we do with what we're given? And when we look at it, we look at the short interest, and I think I'm maybe just partially covering this up with my head here. I apologize. It's kind of hard to move this thing in real time, but if you can see here, maybe it's just not, it's just barely you can see it there. Right beneath my head, I think you can see that the estimated short interest from Ortex was 35.83 million shares, which is up from the prior week's estimate of 33.6 million shares worth of short interest. And again, this, if you're unfamiliar, this is from Ortex, which is a third party that estimates this data, but it is not not an official number. Oh, did my video go out? I have no idea what's going on. Sorry, I'm having some technical difficulties today. I'm going to keep talking because I think the microphone is still working. Hopefully it will come back. It did earlier. So anyways, the short interest is actually up even after this, sort of tick downwards you see there in this orange line on the graph. That was on, I think, Thursday and maybe even Friday, where the estimated short interest did tick down. After a peak of, I think, about 37 million shares of estimated short interest. Now, we won't have official numbers on this until, I think, Wednesday. Even that will only cover through the 15th of August. So we will never actually get real-time data, as probably a lot of you are aware, but it will be interesting to see what it comes out as on Wednesday. If you believe the Ortex data, it looks like the short interest has just continued to climb. And so we're going to see what's going on there. And similarly, the cost to borrow, it dropped late in the week from its peak during the week, but it is up from the prior week, right? The cost to borrow is still, pretty high, in my opinion, at about 30% the fee there. And so I think that, again, sort of gives you this major potential for folks who are short the stock and who have these positions that end up going underwater. They're paying this high fee to really fuel them to want to close their positions. So then we're talking about one of the big things here that's going to be a focus for me today is Bed Bath & Beyond getting on this Reg SHO threshold list. And you can see right down here, Bed Bath & Beyond is on this list is traded on the NASDAQ. So the NASDAQ is what reports it. It is right here. That might be too small for you to see, but there's really nothing useful other than seeing that it is on this list. And I'm going to talk about that in a bit after I cover just a couple other high-level key points, because that's going to be a lot of my focus today, to tell you what I learned from reading up on the, as much as I can understand, the regulation SHO and what this means to be on the threshold list. A couple other things. Obviously, last week, there were a few very large holders of the stock who sold. And what's interesting for this is, yes, it did seem to create a top, and it seems to have turned sentiment at least a little bit against the stock. But it seems that, this is my take on it, is one side effect of this is that it seems to have generated even more publicity for Bed Bath & Beyond stock and for the current situation. And sorry, I'm trying to open up. My computer is just being super slow today. But to me, it seems like this might be a situation where sort of no publicity is bad publicity, right? Because if you look, if it will ever open up, you see the graph of the members of the Bed Bath & Beyond stock subreddit. You can see it's going vertical. Yeah, so here finally it loaded there, and you can see this is really just going up. And we're at 28,200 members now, and so it's gained, as of August 5th, it was at 14, so it's doubled or August 4th, it was at 14,000. And so the number of folks who are interested in the stock, who are, as evidenced by the Bed Bath & Beyond stock subreddit, has doubled in 2 weeks, right? And so if this doubles again in 2 weeks, that starts to be, a critical mass of a lot of people who are interested in the stock, who are building positions, and who all have who are seeing what other folks are saying about the potential for this stock. So I think that's pretty interesting. And just as a fun calculation, I currently, by my own calculations, I could share it in a future video if anybody's curious. I think there's about 58.9 million shares that are not held by folks who are either insiders, BlackRock, or Vanguard. And as I've covered this in a prior video, I think BlackRock and Vanguard are highly likely to hold on to their Bed Bath & Beyond shares, even if the stock were to do something crazy like GameStop did, as evidenced by what they did during the GameStop squeeze, because they also held a lot of those shares at the time. And as of right now, if you subtract that off of the current total outstanding shares, if every member of the Bed Bath & Beyond subreddit held a position of 2,000 shares, that would capture all the remaining shares in the company. Now, there's sort of a couple things to note about that. Just fun fact. Number one is that there's obviously more folks interested in stock than just those who are in the Bed Bath & Beyond stock subreddit. And number two is, although 2,000 shares per member is probably a bit high for what a lot of folks are able to just toss in here, right? Like that would be a $20,000 position at the current prices, and at some of the higher prices that would be at 20, that's double. And so it might be a bit higher than you would expect. However, on the flip side, there's some large folks out there, right, who have large positions. There's a lot of folks who are professionals, have institutional money that can that they might be using for certain purposes. And then one other thing that does make this a bit of an invalid calculation is to consider that because there is such a large short interest, right, 20 million plus shares worth of short interest out there, those are actually more shares that are out there floating around. And so when we talk about calculating things based off of the outstanding shares of roughly 80 million, there are even more shares than that in circulation right now because of the shorting. So in a short squeeze type situation, even if all of the quote unquote outstanding shares were out there, there could be other folks who are holding those effectively additional shares created through shorting that could also help provide liquidity and help folks who are short exit their positions. So just something to keep in mind. Another thing that did happen this week was that the company reaffirmed that they're going to announce something at the end of this month regarding their balance sheet and what they've been working on. So we'll see there. Then there was also news reports just recently about the company being late on paying its bills. And I do kind of wonder if these are related. If this is a bit of speculation, but I could imagine if the company was in the middle of some, intensive reevaluation process of what they're doing with their finances, how they're structuring things, they may have actually paused payments to some of the folks that they have purchased from, at least temporarily, while they are figuring sort of the direction that they want to go. And so I think that's, to me, those two seem like they could be related. Maybe I'm totally off base there. Maybe they're completely running out of cash. But it seems like, because they have this sort of open credit line for, I think, more than $500 million still remaining that they could borrow under that credit line. It seems unlikely to me that they wouldn't at least be paying their bills right now or until they've maxed that out. And so to me, it seems like these could be related, and we'll just have to wait and see what happens at the end of this month. And then the other person, just to sort of round out everything that happened the past week before I go on with the options data and the Reg SHO. The CFO did sell some shares, and I think he even filed to sell a bit more of his position on Thursday or Friday. So I would expect to see, a couple more shares. I think it was 7,500 shares, although I don't recall 100%. They might be sold by the CFO again. Now, looking at some of the options data. So I grabbed this data. Let me scroll all the way to the bottom if my computer will be not horribly slow, and try to get to some of the charts that I put together. And I was looking at how much open call interest is there in the stock, and how did that change over the past week, right? From August 12th, which was the prior Friday, to August 19th, which was, obviously this Friday. And hi, Wakaza. Thanks for joining. Talking about Bed Bath & Beyond again today, the potential, short squeeze situation. Thanks for hopping on the stream. And anyway, so what I did was I looked at the open interest and as it changed over time. And I put together just a couple graphs, and I'm only looking at call options here. The reason for that is because these represent shares that are very useful, or that are very likely going to go. Yeah, I can see it on my screen. My face is frozen. My computer. Thank you for confirming that you can still hear me, because that's what I was hoping was happening. For whatever reason, my computer started. It's very unhappy. It's halfway frozen at the moment. But I had everything ready. I wanted to still try to go live and do the video. So that's what I'm attempting to do right now. So yeah, I'm sorry the face is frozen. As long as the audio continues, as long as you can see my screen, right? Yeah, that's still working. So I don't know what's up with the camera. Anyways, so I was looking at how many calls were open over time, and so each one of the points on the x-axis here, right? Each one of those groups of bars represents one expiration date for the call options, and the bars from the dark blue bar on the left and the turquoise bar on the right for each one of those groups represents how many call options were open each day, starting from Friday, August 12th, all the way through Friday, August 19th. And so you can see that each one of these groups, or almost all of these groups, sort of there were more options opened over time. And actually, I think I have the totals over here. If I scroll to the left, where we can see, it would be these numbers. Let me scroll up just a tiny bit. And it's these numbers here. So this row here shows from the leftmost column is how many call options were, how much outstanding interest there was as of August 12th. And on the right side, that is as of August 19th. And so you can see we went from about 600,000 call options open, to about 1.1 million, which is massive, right? 1.1 million options actually represents more than the outstanding shares of the company, because that would be, whether it be 110 million shares, and there's only 80 million shares outstanding. And then I have the second row immediately below that, which is showing you the how much options open interest there were for calls, as it changed over time, for expiration dates from August 26th onwards, right? So this was excluding the current week that was August 19th. So you can see even there's 700,000 options, again representing about 70 million shares worth of call options from August 26th all the way through to the January 2024 expirations. And the other interesting thing that I've been looking at is how many of those options, how many of those calls go in the money over time, if depending on various prices of the stock could reach, right? So each one of these groups of bars represents the stock price, and then the bars at that the bars for each group represent how many options would be in the money. And again, there's the this is showing how the open interest in the options changed from August 12th, the prior Friday, to August 19th. And so you can see that there were a lot of options open in the past week and still open as per the Chicago Board of Exchange data that I was able to pull last Friday for these higher strikes, right? You can see there's a ton. That's this the difference between that the dark blue bar and then that turquoise bar for each one of these groups sort of tells you how many options were open just in the past week that would be in the money at various strike prices. You can see the 80, above 80, and then above 40 and above 80. Really, there's a ton of options that got open in the past week, and so this is why we have, I think, this major potential where if the stock price does go up as we start to hit these higher and higher strike prices, you can see there's just going to be a ton of open interest at those higher strike prices where the folks who sold these calls are going to become in the money and require some shares to actually be delivered, and that's going to be and folks who are market makers generally are going to just be buying shares along the way to sort of hedge their bets that the options are going to actually close in the money on the expiration date. And so this total number of options that could be in the money at these strike prices, right? Where, again, if you're just looking at this and I go to this very bottom, you can see there's all those 700,000 options representing about 70 million shares that would have to be delivered to purchasers of these options if the stock does go above that $80 price, and even above the 40, which is not that much higher, right? That's another about another 30% gain on top of the peak that we had at $30 this past week. At that point, you have more than half of the outstanding shares and probably 70-80% of the float that would need to be covered by these options that had been sold. Wakaza says, by the way, I need to walk back my words of Bed Bath & Beyond near my home concerning that they are shut down. It's still open. However, inventory is becoming less and less. Yeah, that's super interesting. Thanks for sharing. And I do actually wonder if I wonder how much of, if you say the inventory is going down, I wonder if that's because of supply chain constraints, or I wonder how much this actually might be. Maybe that does give some credence, right? If I was going to just looking for explanations, maybe it does give some credence to the fact that Bed Bath & Beyond, some of these news reports are that they weren't actually, some of their suppliers aren't shipping them more stuff because they weren't paying their bills. So who knows? It's super hard to say. And of course, it's always hard with, one individual store, right? Like it's one data point, but, it is still one data point. So I do still give some credence to that. So thanks for sharing. Super interesting. Yeah, so that was basically all I wanted to talk about for the options. The one thing that I would call out is if you just look at how many options there are for each expiration date, if you're just looking across these, there are tons and tons. So this rightmost column here is talking about the sort of the current state of things. And if you look where most of those options lie, they're at the January 2023 expiration date. So that's going to be super interesting what happens in January. And there's obviously large volumes of options. The largest volume was for the prior week, right? No surprise. There's a lot for next week, but significantly less, at least so far. We'll see what happens in the upcoming week. See what folks decide to buy this week. But I think just that, just in January 2023, you have almost half of the company's worth of shares represented in those options, and that's huge. And then if I scroll up to the actual strike prices that we have there, this is going to be, let me find it. What's interesting is you look where that's clustered, and there is a ton of open interest at these high strike prices, right? And some of that may have been, again, folks following Ryan Cohen, but you can see these three data points here. Hopefully that's not too small to see. 39,000 options at $60, almost 14,000 options at $75, and then 102,000 call options opened at the $80 strike price, which is massive, right? Like that's what's that, 12% of the company, 12, 13% of the outstanding shares are represented here by those call options. So if this happened to, if, again, there happens to be a significant demand for the stock, significant illiquidity, and that causes the stock price to go up, these options becoming in the money is going to cause, I suspect, some folks who sold these expecting them to be free money and to never have to actually deliver on those shares, to start to scramble to buy shares. And again, this is the classic gamma squeeze that could go on. Well, Kaza says, I'll ask and let you know concerning if it's a supply chain or something else. Thanks. Cool. That would be super interesting to know. Total tangent for anybody who's watching this Bed Bath & Beyond. I'm going to get back in Bed Bath & Beyond in just a second when I talk about Regulation SHO or SHO. I am, this is a company that I'm, hopefully I'm not misremembering, but well, Kaza, I think you're interested in Nightscope. I'm going to get to go to the Robot Roadshow in the next information on the company, but I've got a whole list of questions that I want to ask them about at least. But I haven't actually gotten to see the robots in person. It'll be real cool to finally see. Yeah, so I'm pretty excited about that. But all right, back on my primary topic for today, and Bed Bath & Beyond was added to this threshold securities list. And what is this? This is something where I see some folks, they make it sound like this is a huge deal for the stock and for the sort of short squeeze situation. And then I wasn't really sure about it. And so the best resource, if you just Google or search for it online, you will find this page from the SEC government website that actually talks about what it is. And effectively, here's what it is so a stock goes on the, let me find the actual text here. I will get it. So a stock goes on the threshold list if there are a lot of failures to deliver. And so real quick, a failure to deliver is effectively, you can read the official definition here. I'm not let me again give the disclaimer. I'm not a lawyer, not a financial professional. But a failure to deliver is basically when somebody sells the stock, and then they sell the stock, they do that transaction, but they don't actually have the shares when it comes time to actually give the stock to the person, right? So somewhere behind the scenes with all the brokers and such, they actually have some accounting that says, okay, you have this many shares, you have this many shares, you have this many shares, and somebody has to actually take it from one of those accounts and give it to the other one. And a failure to deliver happens when somebody sells shares, but then later on they can't actually, hand over those shares to somebody, right? It's sort of like if I, sort of like we make a handshake, a Craigslist deal, and I'm going to sell you something, and then you give me the money, and then we come to meet, and I say, oh, I don't have it, right? And that's kind of what a failure to deliver is. And there's some of this that's allowed to just happen as long as folks sort of clear it out pretty quickly. But the whole point of this regulation SHO is to ensure that there aren't too many of those that happen, right? And so that the system is actually functioning. People aren't selling shares that they don't have generally. And so a stock will get on this threshold list if there's if it has a large amount of failure to deliver, right? And they classify this as effectively at least 0.5% of the total outstanding shares. And so for Bed Bath & Beyond, that would be 400,000 shares. If that happens for 13 consecutive settlement days, and settlement days are basically just trading days, more or less. Now, when a stock gets added to that threshold list, basically there's folks have some period of time, that the folks who actually are generating all those failures to deliver, they have some period of time to figure things out. But after about 13 days, 13 or 35 days, and there's some qualifications for who qualifies for what, but either after 13 or 35 days, they have to close out those positions. And so let me find exactly. It was super, not say super, but it was also interesting to actually read I believe this is the text of the law or of the code, whatever. I don't know if this is in a particularly exactly a law or not, but if you go down here to the actual text of this one, 203B3, this is they talk about if that happens for 13 consecutive settlement days, that for the failure to deliver for one particular participant in the financial system, that participant shall immediately thereafter close out the failed to deliver position by purchasing securities of like kind and quantity, right? And so effectively, at some point, if this goes on for too long, they are forced and they have to buy the shares. They have to just go out to the market and buy them. And so this is another form of forced buying, similar to a, sort of a short squeeze, where if folks, are just losing so much money and they can no longer afford to be short the stock, they have to just, liquidate and buy the stock to close out their short position. But this is another way that can happen, even if they might still have the, effectively have enough money to be able to support their short position. If they haven't actually delivered the shares for whatever reason, they are forced to do this. And because Bed Bath Beyond is on this threshold list, as I sort of showed before, and it's been on this list since the 16th. So it's been, what's that, 3 days so far? 3 days or 4 days, depending on how you count it, I think. There's a lot of potential that, in 13 trading days from there, or in 35, and that's why I say 35. You can feel free to read this yourself if you search for this particular regulation. You'll find this actual law text from Cornell's website, and there's all these exceptions that basically say, well, if these things apply, you actually have 35 days, not 13 days. And I have to imagine that folks are going to be a little bit loose with interpreting this. It's kind of hard for me to tell because I don't know the ins and outs of the financial system, but it sounded fairly generous for a lot of people to maybe qualify for this 35 days before they have to actually close out the position. But yeah, so this is what Regulation SHO is all about, and this is why some folks, on sort of Reddit, social media, are interested in the fact that Bed Bath & Beyond is on the threshold list, because folks might be forced to, they shall immediately close out the failed to deliver position by purchasing securities of like kind and quantity, right? Meaning they are forced to buy the stock, meaning, rocket ships, somebody is only buying, price doesn't matter, stock go up, basically. That's the speculation, at least. And so, if you want to go read it for yourself, feel free to do that. Just as a data point, I did go back and look. GameStop was added on the New York Stock Exchange threshold list on December 8th of 2020, right? And so that is about a month and a half before the January 29th, peak in the stock. And you can imagine that was, I think I looked at it and basically nothing happened 13 days later, but it was pretty close to 35 days later when, timing it to, when the stock started going way up in January, right? And so that I thought was maybe give some a vote of confidence towards this, again, being a situation that could repeat with Bed Bath & Beyond if a lot of the other factors line up, as I've, talked about. So overall, we're going to have to see what happened. But I thought that was super interesting. So hopefully that helps you learn a little bit about Reg SHO, Reg SHO, however you say it. And that is, everything I had to talk about today for Bed Bath & Beyond. I'm going to see what Kaza says about, I think it's all about Nightscope. So let's see. Well, Kaza says, just got done having a meeting with Nightscope this past Friday. The presentation is impressive, better than expected. Of course, there was a few caveats. Next time you do Nightscope, I'll share some info. Awesome. Cool. I'm super excited about that. I don't know what I haven't looked and see what I'm going to do for this week. Nightscope is obviously one of my favorites, as I'm sure you know, so I will have to see what happens. Well, Kaza says, also, by the way, the activist investor for Bed Bath & Beyond that sold all the shares was a big letdown. Yeah, so there were actually, I'll talk about this and give a quick, opinion. There were actually two, right? There was Jake Freeman from Freeman Capital Management, owned about 5 million shares, sold out. That was really no surprise. He had written the letter about, I did a whole video on it, on how Bed Bath & Beyond could restructure some of their debt, because that's one of the big short thesis is that Bed Bath & Beyond has a bunch of debt due in 2024, and that as of right now, it looks like they have no chance of paying it back, right? Unless things really turn around for the company. And he was basically saying, hey, you can leverage a couple things to sort of raise some money in a way that's not too horrible for you and let you, push out some of these debt payments and pay off some of it, and get out of the situation where you have to come up with a bunch of money in 2 years. Then there was also Ryan Cohen. I think that was the bigger story for a lot of folks, because he's the executive chairman of GameStop, and he held GameStop throughout the whole short squeeze there. And and one of the things about Ryan Cohen was that not only did he have a bunch of shares, he had some of these call options, right? And that's what I alluded to, is he had these call options for January 2023 at these 60, I think it was $60, $75, and $80 strike prices, which is way above where the stock was, right? And he's also the one who wrote the letter to Bed Bath & Beyond and said basically, look, bye-bye baby is probably worth more than your entire market cap right now is. You should spin this off, you should sell, you should do something, because this is effectively being majorly undervalued because it's part of the same company as Bed Bath & Beyond. And so yes, that was a big letdown. On the flip side, I think it's super interesting that he did all of his shares at the top, and it really, the stock was still really high, and momentum and sentiment was still very high until folks saw that he sold out. And while I think that's, I don't know why he sold out, right? Nobody does at this point. Nobody, at least in public, does. To me, it does look like, he probably lost. I think it's one of two things. If you want my opinion, not that anybody out there has cares too much, but I think there's certainly the bearish case in interpreting that's I think most realistic. If I was gonna lean bearish, would be management. It was not actually doing what he thought was the best thing to do, and the shares were up, so he decided to sell and take the profits because he didn't think that what management was doing was going to yield a better outcome. The potentially positive, the more positive interpretation here was effectively, I think maybe two things that could go into this, right? Number one is the macro environment is worse than it was when he initially took a stake in sort of early March, and his estimations of how much the company could turn around at the time might have been colored by the macro picture, and maybe that's a lot worse now, right? You've seen a lot of stocks, the whole market has gone down since he initially took his position in Bed Bath & Beyond. And I think he might be doing the math and saying, look, the multiples for everything have come down, so bye bye baby maybe used to be worth $2 billion or whatever. I don't know, I can't remember exactly what he said, because the multiples have gone down. Now it's only worth $1 billion, right, versus comparables. And so if the stock's already up at what it would be given those current multiples, that's where I can take my profit. I think another one is Ryan Cohen, he did hold his shares during the GameStop thing, and I don't know if he really I could just imagine being somebody who's already wealthy, if he held those shares and was sort of seen as somebody who was instigating these sort of short squeezes, that would open him. I would just be afraid that would open me up to a bunch of liability by the SEC, by whoever, by folks, because the folks who are on the other side of this, who are losing money in these short squeezes, are, I think, folks who have a lot of money and presumably power and influence. And I could imagine that, he would probably not want to be associated with that a second time. And so, it just something to sort of something I thought about. So that's kind of one of my thoughts in it. Wow, this video has turned out to be pretty long. I am probably gonna hop off real soon. I don't know what cause, if you have any additional thoughts, closing thoughts. For if there is anybody else who is still out there watching this, I will give my normal spiel. I do these videos in the evening time, Eastern US time, 9, 10, 11 p.m. Somewhere in that vicinity, usually on try to hit as many nights as I can Sunday through Thursday evenings, and I do them all as live streams, so if you ever want to hop on and chat, feel free to do so. All right, Wakaza says, mahalo, Dustin. Thank you, Wakaza, for hopping on, and I'm going to be gone. Thank you, everyone. Have a good one.